Most editors, weekdays at 8 a.m.
Viewers, thanks for tuning into Countdown. My name is Neeraj Shah. With me will be Agam Vakil as well as Navneet Saluja. And let's take a look at what the markets are doing at this hour. We've been faring fairly okay, just that we've slipped off a little bit from the highs of the day. So we were up about 0.5% or thereabouts at the peak. It's just come off quite rapidly in the last 15-20 minutes of trade. The Nifty Bank, which is up about 0.4%, that's probably not done as poorly. Actually, no, even that one has. It's actually following what the Nifty Bank has done. Chicken and egg situation, but essentially the Nifty Bank and the Nifty both following an identical pattern. I wonder if the market breadth too has reversed a little bit or has, come off a little bit from where it was. No, really, it's even Stevens. Just in the last few minutes of trade, a bit of an opening up in favor of the declines, but actually it's even Stevens. So nothing so much at the broader end of the spectrum, just a bit of a correction that has happened in the large caps. Bring up the heat map and let's see what's doing well and what isn't. ONGC is down about 10%. A lot of talk about how ONGC and upstream companies will be asked to share a windfall tax of sorts, and therefore subsidy sharing coming back to the upstream space. That would mean that the downstream companies could well be left out from the pain, but as of now, because there is uncertainty, the market is in a mood to punish all. Of course, ONGC's fallen a lot more than HPBP, IOC, and I suspect Oil India too would have corrected quite vehemently in the session today, so that too would be down, but 11% down for ONGC is not a mean feat. Tata Motors down about 7%. That one is a result reaction, and on the flip side, IT is doing well, but you would probably argue that while the Nifty Bank has come off a little bit, it's ONGC, the principal culprit. Just before I hand it over to Agam though, I just want to bring up the stock price of Oil India. I would presume that that one too would have taken it on the chin in the session today. Should be down in trade. Oil India about 11% down. So both ONGC and Oil India, the principal culprits. We will talk about them with an expert in moments from now. But just watch out. These are the ones under the pain currently. Agam, what about the broader end of the spectrum?
Well, largely evenly placed when it comes to the advances and declines, as you have been pointing out. When it comes to the Nifty 500 too, let me start off with some gainers. So Eros International, that is gaining on the stellar earnings that we've seen, and that's evident on your screen there. We are looking at an uptick, a substantial one, that too, and we're also expecting good earnings from Kaveri Seed Company, which is why it's steady ahead of its earnings. So two stocks to keep an eye on the back of earnings reaction, but one stock that has been bearing the brunt of, well, poor earnings, at Jet Airways, and it is largely crude oil prices also bearing down on its earnings, especially its operational performance. GETND is the other stock which is also down by quite a bit, in fact down as much as 7%, and again weakness on account of its poor fourth quarter earnings. PC Jeweler is once again buzzing in volumes. No particular reason, but there certainly has been some amount of, well, weakness. Do remember this has been an extremely volatile stock, and we're going to have to watch out for this one whether or not it does show more weakness. But these are just some of the counters that I'm watching out for. But Navneet, what are we tracking when it comes to derivatives?
Well, Agam, clearly the markets are off the day's high. Just when I thought Nifty was approaching the 100-day moving average of 10,537, it took a U-turn from those high levels of 10,519 for the day. So clearly off the day's high by about 40 to 50 points for Nifty. But remember, Bank Nifty is the one which is in focus today, 25,800 on that one. The options expired, but before we go to the options, if you could just pull up the futures plate of both and check what's the current discount right now. Look at that discount. It's widened for Bank Nifty May futures, almost 75 points. Pull up Nifty futures as well, and let's check if there is any sort of open interest build up, 2%. But let me tell you, the widening of discount on index futures is clearly not a great sign, which is taking place for both your benchmark indices, Nifty as well as Bank Nifty. The volatility seems to be off today. So the India Volatility Index has corrected and corrected sharply. It's trading with cuts of almost 5%. So that's one positive takeaway. In terms of option strike, let me start off with the Nifty ones. Some bit of put writing has come back, or call it buying, because there is some bit of OI addition that has come in once again for the 10,500 put, which was so far sitting with maximum open interest on the put side. Currently, there are almost 56 lakh shares there, and today's addition has been nearly 10 lakhs, almost. 10,400 is the other one, where almost 9.5 lakh shares have been traded, and some bit of unwinding seen for the 10,600 strike as we speak. 2.5 lakh shares have been shed there, almost 2 lakhs actually. In terms of Bank Nifty, the most active strikes for the days are 25,800 call, 26,000 call, as well as the 25,600 put. What's the range that one should be watching out? Clearly 26,000 will be on the upside, as that's where the maximum OI concentration is. But in today's session, we've seen some bit of put riding, and the maximum put riding has come in for 25,700. So likely we may expire above that mark of 25,700 for Bank Nifty. Quickly, just two stock futures, Kaveri Seed and Jet Airways, both have been mentioned by Agam, but just want to tell you the Kaveri Seed has gone up on very high volumes on the cash side, so watch out for the delivery data. The futures are witnessing fresh long positions, and yesterday Monish Pabrai's fund bought 1.2% stake. Probably that's the other trigger why the stock's been moving higher in today's trade. Jet Airways, it's hit 52-week low. We know why the stock's trading lower. The numbers were not so great. It's posted a loss figure, but let me tell you, the stock is off almost over 50% from the 52-week high that we'd seen in the month of January itself.
Yeah, but oil and gas is the story. Ajay Bodke is with us, but let's also welcome in Kirit Parekh. Needs no introduction really, a veteran in the oil and gas space. On this news that is there, which has come out on the PTI, that the windfall tax on ONGC is in the offing to soften the petrol diesel prices. Mr. Parekh, thanks so much for joining in. Ajay Bodke, thanks so much for joining in as well. Mr. Parekh, my first question to you really. While this was one of the three options that was there in front of the government, the investing community would be a tad unhappy that when we were talking about how sectors are being deregulated and are given free pricing mechanisms, this comes as a blow of sorts, if it does come about, to the upstream oil companies. Your initial thoughts on this?
Yeah, well, I think this would be a bad move on the part of the government, because in the first place, you know, ONGC's production would be about 20% of the total oil consumption in the country. So if you are going to put a tax of even if 5 rupees on ONGC per liter, then it would all amount to, at the end of it, 1 rupee at the consumer price end. And I think that's one thing. There is some, perhaps one might justify slightly that on the production from blocks which were given to ONGC on nomination basis, the government should have some right to get some excess windfall gains from that. But other than that, I think the indirect consequences of this are very bad for the country. We are trying to attract all kinds of international and national power players into exploration and production in the oil and gas sector. They are often reluctant to do so simply because the uncertainty in government policy, and the government policy which fluctuates from day to day, and that increases enormously their government policy risk. And I think this would give a very bad signal to the potential investors in the country. And I think we are really reducing the potential of producing more gas and oil domestically, and in a sense increasing our reliance on imported oil and gas by these kind of an action.
Mr. Parekh, you know, so one, they've spared the downstream companies, I presume, by a move. If indeed this move turns out to be true, let me qualify my statement. Part two of my question, though, would be that would you have rather that the government go out and reduce excise as opposed to taxing one of the two spaces, which is upstream or downstream? And the difficulty of doing such a move in light of how tight the finances of the government themselves are in the pre-election year?
Yeah, I would argue that the government should do to reduce the excise by 1 rupee, at least one, preferably 2 rupees. Ask the state governments to reduce their VAT, and state governments can reduce their VAT, which is ad valorem, to really have their they're protecting the revenue. They can still reduce the VAT by about 2 or 3 rupees, so that the consumer price can be reduced by around 3 to 4 rupees this way. Now, what should the government do about the revenue loss? The state governments can protect the revenue. The central government, the excise is fixed excise, it's specific duty and not ad valorem. So they would certainly lose some money. But what I think they can do is they should really try to cut down other subsidies. For example, the subsidy on LPG, which has been given to a large number of people, I think there is a scope for reducing at least 20% of the consumers who are clearly identifiable rich and we could be excluded from that subsidy. I'm not saying reduce the subsidy to the poor, bottom 70% of the households. I'm merely saying at least the top 30% of the household subsidy, if you can reduce, you can gain quite a lot of the money, save a lot of the money this way. And I believe that the government is a little bit being too overcautious because if you expect the prices to continue to remain at that level, then yes, the losses would be what they are projecting for every 1 rupee loss. But if you expect that these prices would be coming down within 2-3 months, then they would have a real some leeway to do that. Secondly, I feel that this fiscal deficit number would now come back only at the end of March 2019, and the government would have some more scope available later on to adjust their expenditure and so on. Particularly if the GST collections keep on growing at a substantial rate, then they would really, their worry about fiscal deficit becomes somewhat exaggerated.
Got it. Okay. Mr. Parekh, really love having you on this quick interaction. Thanks so much for taking the time out and being with us today.
Okay, right. Bye.
Well, thanks. That's Mr. Kirit Parekh, but I'm sure Ajay Bodke has some views, but clearly the stock's under pressure, guys.
Yeah, and how both ONGC and Oil India have seen some bit of fresh shots building up. But let's bring in Ajay Bodke of Prabhudas Lilladher to extend that conversation with regard to ONGC and Oil India sharing the burden for higher fuel prices. Hi Ajay, good afternoon and appreciate you joining us today on Bloomberg. Do you think this was the most convenient option that the government had? They're not cutting down the excise duty as there's a fear of fiscal slippage there, and this was an option which was walked somewhere, I think, pre-2015 era when the 40% of the subsidy burden was borne by all these upstream companies.
Good afternoon. I think with the limited fiscal space that the government has and the concern that the government doesn't want to fiscal deficit to widen any further for FY19, the government, in my opinion, had no alternative, because of the clamor of criticism that's coming from both opposition as well as sections of media about the prices at the petrol and diesel prices for consumers. The only option the government had was to either ask the downstream companies or upstream companies to share some burden. Now, I think the downstream companies have very limited space to accommodate large burden, and hence ONGC and OIL, which have got pre-NELP blocks on a nomination basis from the government has no alternative but to ask them to bear some burden. It does send out a wrong signal insofar as the going back on the reform process is concerned. But I personally see no alternative that the government has because the fiscal space is very limited. Every 1 rupee drop in every 1% drop in fiscal, 1 rupee drop in fiscal in the excise duty leads to a 13,000 crores of dent that the government has. And with the GST revenues just picking up from last month, I think the government would like to see how the trajectory of those revenues go for the full year. They simply can't take a chance. And hence, I think this is, if the move is right, if the move is as you say, I think I completely see it from the government's perspective. They have no alternative.
Point well taken, Ajay. Maybe they didn't have any option, but let's not forget we're operating in a scenario where prices were deregulated. Do you think the next step now should be to bring petroleum products under the ambit of GST?
I think yes, and I think the government would like to do that it will have to take all the states on board. But whether the states would like sort of to come on board is a moot question. I personally feel that the government in the medium term would like to bring the petroleum products under GST, but it doesn't seem feasible that it would happen before the general elections. So one will have to wait, in my opinion, post 2019 for inclusion of these products under GST.
Right, Ajay, let's shift focus to what is also been playing out is the strengthening of the dollar against the rupee. We've seen an up move in a lot of these information technology stocks. It can't only be because of the rupee. Are there any other reasons that you attribute to this up move in the information technology sector right now?
Yeah, I think when the up move started, the under ownership of this sector was quite stark. Almost all the portfolios, after 2 or 3 years of underperformance in mutual funds and insurance companies, had gone massively underweight on this sector. So that was the starting point, sort of, when the under ownership was at a very large, to a very large extent. Secondly, I think the demand environment, as the US economy is picking steam and picking steam quite strongly, the BFSI sector, which is the prime driver of the outsourcing services in India, I think the demand outlook there improved dramatically. And if you look at the commentary that's coming from the IT companies, especially the mid-cap IT names, I think many of them are expecting FY19 demand growth to be in early teens, sort of between, say, 13 to 15%. Now that sort of, in addition to the weakening of the rupee, has been the prime driver for the up move of IT stocks, and in particular mid-cap IT stocks, along with a few large-cap IT stocks like Infosys and TCS in particular. I think HCL Tech and Wipro have been laggards, but that's essentially because the demand outlook that was projected by these companies for FY19 is quite inferior as compared to the other large-cap names. Now, having seen a sharp up move in mid-cap IT space, I think it's time for investors to be cautious now, because many of them are trading at significant premium to the large cap names, and many risks, sort of, concentration risks in terms of one sector that they have an exposure to, or a few names among clients that they have exposure to, has been underappreciated, in my opinion, by the market. So we've had a very good rally, but I think it's time now for investors to be cautious in some of these mid-cap IT names.
Ajay, what's the view on the overall market? We've seen a very sharp correction. If you look at the broader markets per se, which rallied a lot in 2017, are you using these dips to buy into any quality stocks, or do you see more correction to come by, considering the yields are soaring, the rupee is depreciating, nothing's going right in terms of macros right now?
Yeah, I think with the global oil prices on a boil, the macroeconomic fundamentals of India are deteriorating, sort of, but on the other hand, I think the micros are showing some improvement. Although I must point out that the takeoff in earnings growth is not as strong as one would like to be, especially because sectors such as PSU banks or corporate focused private banks still continue to reel under accelerated provisioning necessitated by sort of a large number of assets, especially in sectors, in the infrastructure sectors, still going sour. So I think I would be looking at the market from a buy on dips perspective, and I'll be using this opportunity that the market has afforded to buy into retail focused private banks, autos and auto ancillaries, and FMCG and retail names, in addition to a set of good quality mid caps. So I think this is the time for one to look at building a portfolio with a medium to long term perspective.
Ajay, I did hear you speak about retail and FMCG names. My question with respect to that is that a lot of these stocks are trading at lifetime highs. At what point in time would you start getting concerned when it comes to valuations? Because in a lot of these companies, despite the fact that we've seen the markets come off, that is the major indices come off, some of these counters have still stayed put. So at what point in time do you start, reconsidering your positions in some of these stocks?
I think when I heard some of the managements in the conference calls, what really stood out is the strong volume growth that one has seen in the fourth quarter, and especially the volume growth coming from the rural segments. I think the rural volume growth is at a 2-year high. And one clearly is expecting a sort of, if one expects a good monsoons, I think the expectation is that as one goes into the second half of FY19, I think that volume growth should pick up. In fact, we are expecting a double-digit volume growth in case of many FMCG companies, and pricing power, albeit sort of is still not back with these companies. So when one juxtaposes a strong volume growth and sort of pricing power coming back in the second half of FY19, I think one will clearly see a very robust top line growth for these companies, where operating leverage will come into play, and the profitability growth, in our opinion, will continue to be better than what the market expects in the FMCG names. So I think names like, say, Britannia Industries, or even a company like Kansai, Nerolac and Asian Paints, which have sort of got beaten down, Kansai in particular, because of sharp rise in crude oil prices. And on the retail front, sort of an Avenue Supermarts, investors should look at them sort of with a medium-term perspective.
Okay. Ajay, my final question to you is, what have you made of the kind of numbers that have come in the auto component space, and this talk overnight about Donald Trump saying that why not go out and put tariffs on auto component imports into the US? If that were to turn out to be true, it's a problem for some of the larger ones, Motherson Sumis, Bharat Forges and the likes.
I think, Neeraj, if we go back just before the inauguration and even after his inauguration, the similar concerns sort of were expressed in case of IT outsourcing. And sort of we have seen that even in case of the tariffs imposed on China, I think it was more a posture in terms of trying to wrangle a better deal. So I think the deal maker that he is, I think one should take these statements sort of not with I mean one should not be alarmed by these statements, but these simply are the postures sort of to wrest a better deal. So I think one would, I sort of would not be too alarmed by this statement. And on the auto ancillary front, I think some of the numbers sort of have the rise in raw material prices has put a lot of pressure on the margins, like Bharat Forge being a classic example, or even Motherson Sumi numbers have been a tad disappointing. So I think one will have to tread that with a bit of caution out there. But on the auto names, I think I would say that Maruti Suzuki on dips, and Tata Motors at the current price, because I think this is a contrarian call that I have. We are expecting a strong rebound in Tata numbers if you take a medium-term perspective or 2-year perspective. Both on the new product launches on the JLR front, the aggressive accounting policies that they have taken to in terms of write-offs, and in the domestic business, I think the way they have turned around the CV business and very laser focus that the current Tata chairman has on this franchise, in my opinion, I think this is a stock where one can expect significant upside if it takes a 2-year perspective. In fact, we have a target price of 500 rupees from an 18-month perspective at Tata Motors on the back of very strong growth in earnings and improvement in balance sheet over a 2-year period.
Well, despite of all the headwinds, Ajay, the majority of the analysts on the street are still positive on Tata Motors. Let's see if there is any recovery which can come by in the coming quarters or not. Thank you very much for joining us today and taking us through your thoughts on the markets. Well, talking about the earnings season, Kolte Patil came out with strong set of numbers, strong top line and bottom line growth was witnessed in the fourth quarter numbers. In fact, they also, this was the highest ever quarterly collections that was seen for this quarter. Net profit stood at nearly 40 crores, which was an uptick of about 29%. Let's get some more details from the management. Joining us on the phone line is the Chief Executive Officer, Mr. Gopal Sarda. Hi, Gopal. Good afternoon and congratulations congratulations. The number do look pretty much good. But if you could take us through the highlights of the quarter gone by, because we can see the profits of, I think the line is disconnected. We'll get back to the management of Kolte Patil and we'll try and connect with Gopal Sada once again. But overall, I was just looking at the return ratios. There's been a sharp improvement that one saw. The ROCE was at 18.4 versus 14.5, which was seen in the corresponding quarter. ROE was almost 12%. So there was an improvement seen in the return ratios, and also EPS growth versus FY17 was also good. I think the EPS which they posted for full year was somewhere about 16 rupees. I think we have Mr. Gopal Sada back with us. Hi Gopal, I was just asking if you could tell us what were the major highlights of the quarter, because I can also see there was a slowdown in the new sales booking for the fourth quarter.
Absolutely. So company records highest ever annual revenue and net profit in its history. Revenue up 46% YOY to rupees 1,403 crore.
Okay, I guess there's some problem. Okay, I think the line...
I just heard Gopal. Can you try? Gopal, can you hear us?
Yeah, I can hear you.
Okay, Gopal, sorry we missed some part of your answer. Can you repeat your answer, please? We got you on a bad line maybe.
Yes, company records highest ever annual revenue and revenue up 46% YOY to rupees 1,403 crore. Profit after tax pre-minority interest grows 8% by rupees 154 crore. Q4 financial year 18 sees highest ever quarterly revenue and...
Okay, I really think it's a slightly tough line. Maybe we should try a landline if we have one. This isn't quite working out. It'll be interesting to hear out from Kolte Patil what they intend to do in the quarters ahead as well. Navneet mentioned about return ratios improving. I think they've taken a liking to the model that Godrej Properties has followed successfully as well, and the kind of brand name that they have, they're able to execute it, which is not buy into the land but enter into a JV with a redevelopment plot and then earn money out in that fashion, which is why the margins, the return ratios, etc., all of them have shown signs of improvement. Okay, while we just wait for that to happen, maybe it's a good idea since the markets have bounced back from the lows of the day to get in our experts, both derivative and technical experts, to try and figure out what are they doing in a scenario like this. Abhijit Phatak, director at Definedge Solutions, joins us right now on the show. In moments from now, we'll of course have on the fundamental side Mr. T.S. Harihar joining in as well. But Abhijit, let me start off the conversation with you. How are you looking at a slightly choppy nature of the markets the last few days? It's not just today wherein we've yo-yoed between the highs and the lows, but if you take the last 4 or 5 days, enough red days and enough green days. What does this mean for an average trader, and what's the kind of trade that you would enter into in today's session on the benchmark indices?
Good afternoon, Neeraj. I think we might have seen a short-term bottom today, somewhere near 10,400, and I expect it to be range-bound at least for the next couple of days between 10,400 and 10,500. And above 10,500, 520, it can go another 100 points. So I would advise to go long on any dip with a stop loss below 10,380.
Okay, advice going long on any dip is the advice coming in from Abhijit Phatak. I just want to address some of the flashes which was just there on the screen. NSE's now software system is not operating, is the word coming in from some trading community members as well, and this is news that we received on Bloomberg, so watch out for that one. Now is a online platform for NSE where maybe some of the clients are facing some issues in terms of punching their trades. Okay, let's get you some trading ideas going, but Abhijit, in terms of stock specific, any trading recommendations for the day?
Yeah, I like two stocks which have got sold off quite a lot, and one of them is HDFC, which hit its 200-day moving average yesterday. So again, it can be bought near 1795, 1800 with a stop loss of yesterday's low, which is below 1775. And in the coming days, I expect it to go towards 1830 or even 1850.
Okay, before we take more, views from our experts, I think we do have a Kolte Patil back with us on a better line. Gopal, hi, if you can hear us. Gopal, the next question was on your operating expenses, which has seen an uptick, and that's possibly the reason why there has been a dip when it comes to your operational performance. My question really is, can we expect this to follow through in the first couple of quarters as well? And what is it that's led to the substantial increase in your operational expenses?
I think operational expenses includes marketing costs. And there is some projects where we have some reversal in terms of. So going forward, I think operational expense will be lesser than. And we expect the quarterly revenue to 270 crore on a quarter.
Gopal, if I may request you, I'll ask my guest team to call you back in 10 minutes if we have a landline number where we can touch base with you, because right now you're losing out all your answers and our viewers are not benefiting from listening to you, because there's just no way to make or decipher what you're trying to say. Maybe we should do this after a space of 10 minutes, but do it when we get the management on a landline. While we wait for that, Jay Bala, Chief Market Technician at Cash the Chaos, also joining in on the show. Jay, good afternoon. Thanks so much for joining in. Gyrations in the Nifty. Abhijit Phatak is with us. He believes that there is a possibility that there could have been a near-term bottom and maybe some upsides. How are you positioning your trades? Are you trading on the long side, or are you selling any kind of rally that might come about?
I'm definitely not selling this rally. There is a very strong possibility that the market is trying to bottom out here. But we must be aware there's an alternate structure also that's possible out here. But that's just got a I would assign a 20% probability of that alternate structure, which is a very bearish structure. That bearish structure is for the market to go back and test somewhere close to the slightly below the March lows it made. But right now it's positive to focus on the bullish structure that is likely to gain more traction. And we don't want the correction to dip below yesterday's low. If it were to dip below that, the alternate bearish structure will get activated. So at the moment we are maintaining our bullish stance, and we are expecting the market to trade higher over the next couple of days. And these next 3-4 sessions are going to be very crucial for the market, whether it's going to be the bullish structure for the short term or the bearish structure for the short term. So we are taking the bullish call and trying to go long on the market.
Okay, in fact, that's a consensus view then coming in from both Jay Bala as well as Abhijit Phatak. Jay, in terms of individual stocks, what are you betting on?
Yeah, see, I like IGL at this point of time. It's been an underperformer since the beginning of the year. It's dropped from 330 to where it is at this point of time. And that's a very choppy move from the beginning of the year. And it's a very harmonic correction to the move it saw from 2015 to the 2018 move. So I think the next leg of the move is starting for IGL, and I don't think it's going to drop below 220. So one needs to place a stop below 220 and expect the stock to come back to its past glory and claim record highs and go past 350. That's one bullish stock for me. Another one for me is actually I have a sorry, I missed that. Yeah.
Thank Jay.
Yeah, I have a bullish call on, yeah.
Jay, is the next call on Yes Bank is what I was checking on.
Yeah, that's right. Yeah, that's right. Yes Bank, it was meant to cross beyond 380 to 400, and this bullish structure is what I am interpreting is correct. It must not dip below 320, and so it's come to a very significant support around 330 odds, and it's very possible that it's turning up from here. We call this as a short-term bottom in wave 4. And wave 4 and wave 1 do not overlap. So, that's the reason why it's unlikely to come down to 320. So if you are to place a stop below 320, I think this is likely to gain more traction and take out the highs made post its positive results. So I think the stock is heading for somewhere close to 380 to 400 from a 4 to 6 weeks time frame.
Okay, with that, let's welcome in Mr. T.S. Harihar, Chief Executive Officer and Founder at HRBV Solutions. Mr. Harihar, good afternoon. Before we get an idea of sectors and stocks, your overall view of the markets, technical experts are suggesting that we're likely to see some consolidation. Is that likely to be?
Possible, but we are still worried about two things. I think oil at $17 and $80 a barrel continues to be a worry, because that only means the trade deficit could still get back to the $15 billion a month, and that means the rupee could actually get weaker. The second is, I think rupee at 68.42 yesterday was actually a worrying number, because 68.80 happens to be the all-time high which we touched, I think, in August 2013. So we are just about, I think, 35 paisa away from the all-time high. So I would be a little worried about that. there have been expectations time and again of the rupee crossing 70. Our view is that if the rupee gets beyond 69 this time, then we could see levels of about 71, 72 in the INR. So that is something we would be slightly worried about. Other than that, I would believe that 10,300 is something we have as a support for the market. So probably worst case, we are looking at about 100, 150 points downside from these levels.
So, Mr. Harihar, definitely the macros seem to be deteriorating. As you mentioned, rupees depreciating. Let's see if it surpasses that mark of 70. But we've also seen correction coming by in a lot of these stocks, which could be related to the prices in crude. Jet, obviously, after numbers has seen a sharp correction. But if one were to see the all-time high levels, it's been correcting quite sharply in the last 3 to 4 months. And the other is the upstream companies like ONGC, Oil India. Would you venture out and try and look at buying any of these stocks which have seen a sharp correction in the recent past?
See, I would be a little wary of both jet and the upstream oil, and for two different reasons altogether. See, we do believe that in this cycle, oil could get very close to 100, if not to 100. I think 1995 looks to be on the cards at least by end of 2018. So, if we are going to see the fuel prices go up proportionately, then it could actually mean tough times for jet. And let us not forget that compared to Indigo and SpiceJet, jet is a less efficient operator as far as the aviation industry is concerned, both in terms of the spread, the RASK and the CASK. They are less efficient compared to the other two companies. So if you look at it in the last quarter, both SpiceJet and Indigo have managed to remain profitable, but it is actually jet that has got deeper into losses. So jet, we are worried, and we don't consider that a top preference at this point of time. Upstream oil, you would know that the government is already talking about a special cess on upstream oil companies, which is something we would be worried about, and we are not surprised, because we had always believed that the government would like to use the huge cash reserves of ONGC and downstream companies at some point of time. So I think a cess on oil to me looks to be very, very likely. The government doesn't have much of a room imposing a further excess duty on petrol, because petrol prices are already high. But I think cess on oil companies to me looks to be a likelihood, and that explains why ONGC is down about 10% today. And I think I would be very cautious on upstream companies.
Right, Mr. Harihar, you also mentioned that the rupee, there is a chance that it could likely weaken further in comparison to dollar. The information technology sector is playing out to that theme. Any ideas here that you'd like to play? And other than that, if you just leave the IT sector aside, any other ideas on the back of the weakening rupee?
See, we believe a couple of things could happen. Number one, I think if the rupee stabilizes about 68, 69, it should actually benefit a lot with these IT and pharma companies. We are probably worried that anything beyond 70 could actually lead to a kind of a macro negative as far as the index is concerned, and the IT will not be spared. So I think if the rupee remains about 69, 70, I would believe IT companies should benefit. I'm not too sure of a TCS or an Infosys, which have already battled and rallied quite far, but I would believe that a stock like Tech Mahindra would stand to benefit quite a bit if the rupee depreciation stays about 69 and 70. So Tech Mahindra already has gone up from about 390 to 700, but I think even at these levels, there's another 15-20% upside that is still left on Tech Mahindra. So Tech Mahindra probably is one stock we would look at. Pharma would be a little more cautious, because I think the overhang of this Form 483 and FDA is too high. But we would believe that stocks like Star, which is I think come down substantially from about 1,000 to 380, 400 levels, or a stock like Aurobindo, I think very specific plays do look good to us at these levels.
All right.
Okay, that's the view coming in on a couple of the pharma stocks like Aurobindo, which Mr. Harihar mentioned. Just want to pull up the intraday chart of Dalmia Bharat. That's trading almost at day's low currently. Remember, that's also in the futures and options market. It has seen cuts of almost 6.5%. But I also want to pull up the intraday chart of ONGC, which was seeing cuts of nearly 10 to 11% when we started the show. But there has been some recovery from the lows of the level. Currently, ONGC is quoting with cuts of 6%. Jay, come in here on ONGC, Oil India or Jet Airways, any of these stocks technically where one can look to take a fresh trade?
Yeah, ONGC has always been an avoid, even since the time I've been bullish on Brent. And Jet Airways, if you recall from our several interactions, I said that is going to drop precipitously beyond the 2008 lows, but that was a medium-term call. So use every opportunity available in Jet to go short. So as well as OMCs, HPCL, BPCL, they're all looking pretty negative on the charts. But Brent is likely to correct from somewhere close to 82, so they are likely to see some sort of relief. Don't mistake that relief and recovery in these stocks as a reversal in trend. As your previous guest has rightly put it, I think Brent is heading much higher. So use the short-term rallies as an opportunity to exit out of stuck-up positions, or use them as shorting opportunities.
Okay, considering we are talking about oil, with the oil marketing companies hiking petrol and diesel prices, which are, they have moved on for the 11th day in a row. The call for relief measures from the government is rising by the minute. And PTI reported a little while ago that the centre may levy a windfall tax on oil producers like ONGC to moderate spiraling retail fuel prices. But according to Jahangir Aziz of JP Morgan, the answer is in cutting the excise duty. And in a conversation with Ira Dugal, earlier today, Aziz said that the government made the most of the windfall gains from crude price fall, and it's now time to pay up. This is a slice of that conversation. Listen in.
On the fiscal side, the decision is on oil, right? Do you worsen your fiscal position by cutting excise, which you've piled on, and you have piled on, and I think you got stuck in a traffic jam because there was an opposition to oil prices. So there's that consumer versus fiscal debate.
Right. So and I think that and this is not with hindsight. Yeah. Back in 2015, when oil prices started to fall, in 2016, we did write extensively about it. So I'm not saying that with hindsight, everybody has 20/20 vision. That perhaps we shouldn't have done what we had done, which is not allow the entire decline in oil prices from 125 to 25 to be taken up by a higher excise taxes, and then use that for public expenditure and capital projects. That was the basic formula at that point in time. Yeah. First of all, the decline in oil prices had nothing to do with any effort done by India. So this was pure windfall gain. And we seriously took advantage of that to make sure that we were not forced to fiscally consolidate during that period of time. I think it's payback time. They need to go and let the excise taxes ease on the excise taxes, and start cutting elsewhere to meet the balance, meet the deficit, this thing, because the entire, it was a windfall gain, and now it's time to give it back up. You cannot say that I'm going to take the windfall gain and not give it back. When the government decided to use the windfall gain for additional revenue, they should have known that there would be a time in the future when they will have to give it back. This is the time.
Okay, and it's come at a time when anyway inflation is picking up, and also there would be a growth impact as well, right? Consumer spending has held us up. Which
is typically why people don't use windfall gains for these purposes. You try to save windfall gains. You do that in your own personal accounts. If you do spend windfall gains, you do find that typically when you need the windfall to use that space is usually during a bad time. It's never really a good time. So yes, this is that when oil prices would go up, we knew that we would be under pressure, but that was exactly the time when we need to reverse the excise taxes. My economists tell me that almost 50% of the oil price today is some form of taxes, whether it's by the state or by the center. That's a very large amount of revenue stream, and neither the state nor the central government should have imagined this was going to go on forever.
All right, you can catch that entire conversation at 9:30 a.m. tomorrow on Indian Open. All right, just moving back to the markets, 10,486 on Nifty. So there has been some bit of recovery seen once again from the lows of the day. Let's see if we can close above the mark of 10,500 or not. But what I want to pull up is the Bank Nifty that's crossed the 25,900 mark as we speak, to 25 points higher. So good going on a day like today's when the weekly options expire. Remember, 26,000 is the level on the upside, which I'm sure most of the traders will be watching out for. Pull up Eros Media International. The stock has been reacting to the numbers today. Good set of numbers on all parameters. In fact, good top line growth. EBITDA more than doubled for the quarter. In fact, if you look at the net profit, that also saw a jump of nearly 85%, coming in at about 58 crore. The stock's trading with gains of 17%, just few rupees here and there from it to get locked in upper circuit. Mr. Harihar, do you track Eros Media International?
See, the numbers are surely impressive, but if you look at Eros historically, there has been a problem of the UK division, and there have been a lot of corporate governance issues pertaining to Eros. So that's probably one reason why I don't think that despite these numbers, we may not see too much of a traction as far as the stock price is concerned. So yes, numbers have been good, but I think till the time Eros gets over those corporate governance issues, I think traction on price may still be missing.
It's the same case where Reliance bought stake in Eros UK and not in the Indian unit. Okay, that's Eros International for you, but let's get some technical chart checks going, considering we've seen a sharp movement in a couple of counters. Pull up NCC, that's the top F&O gainer as we speak, up 9% in trade. Abhijit, on the charts, NCC 9% higher at 115. If somebody had taken a long position in the morning, should they be booking profits right now?
Sorry, I didn't get the name of the stock.
NCC Limited.
Yeah, okay. Yeah, I think they should keep a stop loss of maybe 112 and carry it. Maybe it might close higher also. 111, 112 cash should be the stop loss.
Okay, well, a bunch of stocks that I want to address right now. The first one is Berger Paints. Now, this is basically moving against the way we can expect something like Berger Paints to move, because of the fact that we've seen an appreciation in oil prices, and Berger Paints has a substantial, or at least its input cost has a substantial exposure to some of the crude-linked raw material costs, which is why we would have expected Berger Paints to at least remain range-bound, if not fall. But on the other hand, we're actually seeing it move up by as much as another 3%, edging towards its lifetime highs. If I can get a technical chart on this one, Jay, if you are tracking Berger Paints, it's currently trading at around the levels of 290, 292. How would you go about Berger Paints right now, considering the strength that we've seen in this stock?
Yeah, the stock is placed very bullishly on the charts. I think it's it's doing pretty well for itself. I don't think it's going to drop below 270 in the short term. So I think it's trying to push past its 52-week highs, and once it stakes out, I think the momentum should gain more traction, and we are looking at somewhere close to 340 to 350 in the short term for the stock.
Okay, and the other stock I wanted to address was Motherson Sumi, and I think I'd like to take a fundamental check on this one. Now, Motherson Sumi has seen substantial weakness. In fact, it's fallen well over 10 to 11% over the past couple of days, and it's not only because of earnings. We've also had some headwinds, should I say, or rather weak commentary come from the US markets and President Donald Trump. Mr. Harihar, firstly, I know that you've been tracking Motherson Sumi very closely. What have you made for the earnings? Is this too much of a concern? And secondly, do we really need to delve too much into what Donald Trump has to say about bringing duty on some of these companies which have exposure to the US markets?
See, let me talk about the numbers first. I think if you look at probably Motherson from a very small 2 or 3 quarters perspective, there may be some disappointment. But if you look at Motherson from a longer perspective, I have been tracking Motherson for almost 10 years now, and I don't recollect a period of 5 years where they've actually underperformed. Whatever sales targets they have said, whatever profit targets they have said, they managed to achieve. So I wouldn't read too much into a single or a 2-quarter kind of underperformance. I think as far as Trump's announcements are concerned, I think one thing is very clear from China, that he's a very smart businessman and he tries to get good bargains. And I think he has got a good bargain in China to the extent that China has agreed to cut the fiscal the trade deficit from $375 billion to about $175 billion. So to that extent, I think he's a smart businessman who's trying to squeeze some good bargains, and probably I think Motherson should be able to give some bargains to him. That should not be much of an issue. But the big thing I'm betting on is that the rupee has actually weakened substantially, and Motherson has a very large non-rupee revenue component. So if you add that up, which is not being reflected, I think there's a lot of underpricing in Motherson Sumi currently. So probably I think next 3 to 6 months we should see the stock performing much better.
Okay, that's the view coming in on Motherson Sumi. Pull up Somany Ceramics. That counter has seen a sharp cut of almost 5 to 6% post its earnings came by. Somany Ceramics, just checking the numbers also. The profits have just been the same on year-on-year basis is what I can see, no major jump. And just after the numbers, the stock saw that correction nearly 5.5%. The other space which is buzzing today are the power finance companies. So pull up REC and PFC. Both of them have seen some substantial gains coming about. REC almost at day's high with gains of 4% at 112. PFC up almost 5%. Any value do you see in the power finance companies? Also, just for the caveat, Mr. Harihar, they've been touching fresh 52-week low for the longest time.
See, if you take an REC or a PFC and compare it with the high that they had about a year and a half back, I think the stocks are down about 75% from the peak level. So I think that's a huge correction. In my understanding, the only reason why there is some amount of a bounce is the same reason why a lot of PSU banks are bouncing, because it's expected that with one of the the steel companies completed an NCLT, there should be a kind of a write back coming, and all these are finance companies ultimately, and they have a problem hidden NPS. So the hope is that probably there should be some kind of a write backs coming for these companies also. But I would be a little cautious in these companies. I think most of the banks or the finance companies are not written off their power NPS in a big way. I think that will actually start in the next 1 or 2 years. So I would be cautious. I think there's a lot more trouble as far as power finance companies are concerned.
All right. Okay. Can we also get a chart check with respect to some of the other technology stocks are concerned? And I also want to address what's happening with TCS. Of course, we do know that that is also advancing along with Infosys right now. If I could take this question to Abhijit. Abhijit, we are seeing substantial advances in some of these IT stocks. I'd like your view on TCS specifically. Can we expect more strength to come in as well based on the variables that the charts are commanding?
Yes, TCS is a bullish chart, no doubt, but then I would be cautious going on right now because it has some resistance based on the options parameters right now, at least for this expiry. So I would wait for a dip and then advise to buy, but not definitely at these levels of near 3600. But it is still a bullish chart, no doubt.
Okay, in fact, I don't know if it's the trend or the term bullish, Agam, holds true for all the IT companies today. The Nifty IT being the top sectoral gainer. We've also seen KPIT, that's the one which has touched fresh highs, fresh 52-week high for sure in today's trade of 273. Nifty IT is up almost 2.5%. KPIT Tech up 5%. Mr. Harihar, if somebody were to play this space now that things are turning in their favor, rupee depreciation is creating some bit of tailwind, and this is one sector which has outperformed this year. And let's also keep in mind it corrected in 2017 when the entire market was up. Sure. How do you play? Do you go for the mid caps which have where the valuations are ahead of the large caps, or would you find some bit of support with the large caps like Infi, TCS, Tech Mahindra?
See, as I was saying some time back, I think the large caps like a TCS or Infosys, I think they've had their share of the rally in the last 1 year. So if you look at a TCS, I think from about 2,200 is up to about 3,600. That's roughly about, I think, 55–60% on a stock that already is close to about $100 billion in market cap. So I think I would be very surprised if TCS or Infosys held a lot more upside potential. I think one stock I mentioned some time back was actually Tech Mahindra, which is actually a large cap stock, but I think in terms of traction, in terms of valuation, it is still more attractive compared to the biggies. So I would believe that if you're looking at large caps, probably this is the kind of stock you should focus on. If you're looking at the mid caps, rather than the pure software companies, I would believe the education companies like in NIT Technologies, I think that is where there's a lot of value in technology.
Okay, that's the IT pack, but Pula, Bharti Airtel, that too is trending higher in today's trade. It's almost at a day's high as we speak. Bharti Airtel is up with gains of 3.5% to almost 4%. Jay, on the charts, Bharti Airtel at 370. How is this one looking?
See, the stock had a lot of potential, but it's been a disappointment, and I wouldn't read too much into this rise. But I'd see this as a corrective ascent, and it has potential to even scale somewhere close to 405, 410. But I wouldn't be bullish from a investment perspective. So I treat this as a trading rally, and or as a day trader, take whatever the stock gives from a 1 to 2 day perspective.
Okay, well, there you have it. That's your view on Bharti Airtel, which is also the top Nifty gainer right now. But with that, we're going to slip into a short break here on Countdown, but don't go anywhere. On the other side, we do have the Fab 4 stocks of the day, and at 3:15 we get you a dealings room check and what they are recommending and some closing strategies as well. So stay tuned in a Bloomberg Quint.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
White shirts. कितने plain और simple. Fog scent. Plain और simple white shirt को बना दे special और fashionable. Fog scent. New fashion wear for men.
Hi guys, we're completing 1 year of the mutual fund show on Bloomberg Quint. Take a look at all that we've done over the last 12 months.
Optically, nothing is cheap. Volatility is integral part of financial markets.
Prices change every microsecond and NAVs change every day.
I have been always suggesting that if you can be Kumbh Karna, invest today and go to sleep for next 14 years.
Join us on the next leg of our journey as we attempt to make the conversations even more meaningful on your favorite show, The Mutual Fund Show.
The Mutual Fund Show Anniversary Special, only on Bloomberg Quint.
Welcome back. You're watching Countdown. Well, it's about half an hour to go before we see the markets shut, but we do have earnings from GAIL right now. And well, it's turning out to be a disappointing quarter because we've seen a miss right now when it comes to the top line as well as the bottom line for GAIL. Let's start off with the net profit coming in at around 1,020 crores as against an expectation of 1,340 odd crores, and revenues again below the Bloomberg consensus at around 15,430 crores against the expectations of 14,470 crores. And that's the reason why you have seen that sharp drop in its stock price as well. It was marginally in the green before the earnings came just a few minutes ago and has since dropped by nearly 3% from, well, I should say days highs. So it is something that the investors do not like, and it has been sold into. Navneet.
Okay, that's about GAIL, which is seeing some bit of correction post its numbers as it's trading below, as the numbers are below what the street was estimating for the fourth quarter. But let's tell you about the Fab 4 stocks of the day, and to take us through the same as usual, Yash Upadhyay joins us on the show. Hi Yash, good afternoon.
Good afternoon, Navneet. So a lot of stocks moving on the back of earnings. It was a tough choice to make, but nevertheless, I have selected NCC. Now it's up about 9% today. All in all, a good set of numbers. Their revenues have jumped by about 12% to almost 2,400 crore rupees. The net profit is up 61%, while their margins, they have expanded by almost 450 basis points. But that's not all. The management commentary is quite positive. They are targeting a 45% growth in their top line for FY19 to 11,000 crore, and they're also expecting new order inflows to the tune of 14,000 crore rupees. Kaveri Seeds is up 6% today. We had renowned investor Monish Pabrai through his investment firm buying close to 1.2% stake in the company. That apart, it is slated to come out with their Q4 numbers later today. MEP Infra is up close to 6% today. A good set of numbers, but the key trigger today being the board giving their approval to raise the investment limit for FPIs from 24% to 100%. And finally, one more stock, that is Varun Beverages. It's up for a third straight day. It has been gaining for the last four trading sessions and is up almost 10% in that period. Volumes too at the higher end. Back to you.
Okay, Ash, thanks a lot for bringing those Fab 4 stocks of the day, but there are a lot of stocks which are buzzing in trade. I want to pull up Granules India. The numbers came just a while back, and the stock has seen a sharp correction post the numbers. It's down almost 7 to 8% in trade. If you look at the net profit for the quarter, there's a sharp decline. It's come in at 17 crore versus 36 crore, which was seen in the corresponding quarter for this company. In fact, the top line growth seems to be pretty good. Looks like there is some bit of hit which has been seen with regard to the raw material prices for the fourth quarter. Mr. Harihar, any views on Granules India? It's correcting quite sharply post the numbers.
Actually, numbers were disappointing. I think we've actually liked the stock over the last, as a very niche play in the entire pharma space. But I think if you look at Granules over a period of the last 4, 5, 6 years, I think it has typically been a kind of an underperformer in the market as a whole. So yes, I think probably a long-term bet, but short-term is slightly difficult to take a view on the stock.
Okay.
Okay, there you have it. That's the view on Granules India. But we have another market voice coming in. We have Amit Jeswani, founder at Stallion Asset Management, also joining us to give us his views on the markets. Amit, good afternoon. Let me start off by asking you about what you make of oil and its concerns on the markets. How much are you reading into it, and in the stocks that you track, are there any which have substantial exposure to the movements in oil?
No, so good afternoon. We do not have any exposure to oil-related stocks, so no exposure there. See, the whole thing is that 2018 has been a tough year, and you have to keep one eye on the short term, which is the short-term risks, and one eye on the long term. Lately, I've written a blog about the next biggest trend, where I said that India in the next 8 years will move from a $2.5 trillion economy to a $5 trillion economy. So broadly, we've created, in 70 years, we've created $2.5 trillion. We'll create $2.5 trillion again in the next 8 years, right? So as much money which was created in 70 years will be created in the next 8 years. So there are going to be trends every 3-4 years, but in years like 2018, capital protection becomes very important, and that's what we've been trying to do this year. This year we've been mostly on, like, we've increased our cash weights, we've decreased our portfolio beta, we've decreased low quality stocks from the portfolio. So that's what we've been doing and trying to save the portfolio rather than going out and trying to hit sixers this year.
You added any good quality stock, Amit, in the portfolio considering the correction that we've seen?
Oh yes, we've added one high quality NBFC in the portfolio. We've got out on one real estate stock. So that high quality NBFC is basically a multi-line NBFC, and also has got a large consumer AUM. So that's where we still believe that NBFC has a 83,000 crore loan book, and that is just 1% of India's credit market, but it's got all the right things there. So that's one. So the thing is that this NBFC is growing at 40% plus, and we don't find any reason why this cannot be 2% of India's credit market share or 3% of India's credit market share. So you have to bet on good companies. They're not going to come cheap. Like when we bought it at 42 times. So they're not going to come cheap, but you can at least see like the profits going higher for next many years going forward. Like example, DMart 5 years back did a profit of 100 crores, and DMart was a very good franchisee then. Today, this year, DMart did a profit of 800 crores. So the profits have gone up 8 times, and we can crib about valuations, but valuations of these companies, these high quality companies which have high ROCs, they're not going to come down. So that's not going to happen in near future. They will come down 10% odd, but 10-15%, but nothing more than that. And low quality, look at what is happening to low quality. Everyone who went out there and trying to buy the next multi-bagger, you know, they're just getting burned. Their portfolios are down 25-30%, and that's a very large drawdown. So this year we're just trying to protect. In fact, we also have taken a knock. It's not that we've not taken a knock. We're down 1% for calendar year 18. But you know, you have to see that you know, where are going to be the next trends, and this is going to be like a move towards quality, you know, and that's going to work well for the next 1.5 years.
Okay, hold that thought, Amit. Let's, you know, take stock of what's really happening with some of these graphite producers, which have been on a roll for the past few months now. And while two Indian listed players, Graphite India and HEG, have gained a lot, they seem to have played a catch-up to their global players. And Nikki Mirchandani is here to give us more details on this interesting trend that's playing out. Nikki, good afternoon.
Hi. Clearly, graphite electrode makers have been in a sweet spot for quite a while now. But if you look at HEG, that's one stock which stands out in terms of performance. Look at the share prices. On YTD basis, clearly the stock has outperformed significantly its other listed player, domestically Graphite India. And also, if you look at the performance with that of the Tokyo-listed Showa Denko, Tokai Carbon, and the US-listed Graphtec, you would say the company has outperformed. Now, the orange bar, which stands for the share price return, you would see the company HEG outperforming its peers and also performing in line with some of its international peers. But look at the valuation, hands down, you would see EV to EBITDA trading cheaper as compared to all the other players. Clearly, that's the case with international peers, but also the case with Graphite India, where it trades at a good 30% discount. It's trading at a 12 months EV to EBITDA of 8.06 times or 8 times as compared to nearly 11 times that we have seen for Graphite India. So what is leading to the big discount that we're looking at for HEG as compared to Graphite India and also some of its international players? It's clearly international players have a backward integration process and a presence of the more carbon black segmented revenue, which has led to the bump up in terms of the valuations for the company. However, for Graphite India, we can look at better balance sheet situation, which has led to higher valuation. Having said that, Jefferies has a buy rating on HEG and says that gives a potential upside of nearly 30% from the current market level, saying that the earnings are expected to improve going forward, and also the balance sheet situation has been improving for the company. And also do bear in mind the fact that graphite electrode makers, the prices of graphite electrodes have been on uptrends from quite a while now.
Nikki, thanks for that. Mr. Harihar, before we let you go, is there any idea that stands out for you right now at this point in time in such markets?
I think Tata Motors is one. It may sound a little contrary at this point of time, but if you look at the results that came out yesterday, I think the fall in profits was largely because of the 1,600 crore hit that they took on impairments. So if you remove that, actually the results have been good. And let's not forget that the biggest chunk, $28 billion comes from JLR, and JLR has actually been growing very fast both in China and in US, which are the two biggest markets for JLR. So I think Tata Motors overall to me looks to be an extremely cheap stock. I think it's at 300 compared to about 600 1.5 years back. So it's a great buy at these levels. I think growth should probably come a little slow both in the domestic and the global front. But I think at 300 to me the downside risks are very low. So we are targeting about 440 for the stock in the next 6 months.
Well, that's the bet which everyone's been taking. It's the cheapest Nifty company, mind you, which is available. 70% of the analysts on the street are quite bullish. Only 2 brokerages have a sell rating, is what I've been checking on Bloomberg. But still, disappointment continues for Tata Motors. Mr. Harihar, we'll leave it at that note. Appreciate you joining us today and taking us through your views on the markets. Just want to cover the stocks which are likely to enter into the F&O ban for tomorrow's trading session. So watch out for stocks like Jain Irrigation, where the total open interest as a percentage of market-wide position limit yesterday was almost 91%. And remember, for a stock to enter into the F&O ban, it has to breach the 95% mark. Today, there's been some action on both the futures as well as a couple of the option strikes for this one. Jet Airways, which is trending lower. Remember, it came out with its earnings. It also came out of the F&O ban, and traders have started taking fresh short positions in this one. It looks like there is heavy shorting that is taking place in today's session, which is clearly visible on the stock price movement as well. well. This too looks like may surpass the 95% mark, and if that trend holds true even towards 330, it could enter into the F&O band for tomorrow's trading session. So watch out for both Jet and Gen Irrigation. Jet has seen a sharp correction of almost 7% in today's trade. I want to pull up TD Power System. We spoke to the management in the morning on back of their earnings, and if you look at the counter now, it's trending lower and it's down almost 15 to 16% in trade. It's seen cuts of almost 15.5%, though the commentary from the management was they were expecting high-digit single growth for FY19 of almost 8 to 9%, but clearly no respite there for TD Power. In fact, if you look at this company, market cap of nearly 550 crore, and it's a net cash company. They're sitting on cash of nearly 160 to 165 crore. Watch out for TD Power in today's trading session. It's down 15. Let's see if there is any sort of recovery which can come by in the last few minutes of trade. Quickly, Abhijit, Phatak, on the charts, any view on TD Power? Where is the support coming on the charts after 15% cut?
It's quite a weak chart, but I can see a support on a long-term chart at around 150, 155. But I mean, the structure is weak unless it. I mean, it will be much weak if it goes below 150. But if someone wants to take a small risk, he can take a risk right now with a stop loss below 150. But I am not convinced.
Okay, it is looking weak on the charts. Watch out for this one. In the last 6 months, it has seen correction of almost 20% and 15% lower in today's session. It's 3:15, that time of the show, when we get you what the dealing rooms are recommending in trade today. And to take us through the same, Yatin Mota and Darshan Mehta here with us. Good afternoon to both of you. Darshan, over to you first.
Yeah, so one of the stocks that's been actively spoken about, or the sector that's been spoken about, is the IT sector. Look at the way the rupee has been appreciating against, has been depreciating against the dollar. So Infosys is, I think Yatin's going to speak on this, but Infosys is the one that, I was speaking about. It's up almost 3%. The entire IT pack is doing well in trade. So rupee benefits playing out in terms of Infosys. The next stock that dealers are talking about is Bajaj Finserv. Obviously, the counter has corrected from levels of 6,000 right up to 5,800. A little bit of valuation concerns are now being spoken about as the Nifty again inches towards new highs. And finally, the last stock that's been spoken about is Bharat Forge. The numbers were decent, the management commentary was also decent, but clearly some of the FIIs are actively selling the counter on the basis of some valuation concerns that they have. The counter has already run up significantly, so profit booking is being seen on that. But Yatin, what do you have?
Well, Darshan was talking about IT stocks and mid-cap IT space, KPIT Technologies, that stock is active, trading at the day's high. Dealers are recommending a BT-ST kind of a strategy, which is buy today, sell tomorrow. Dealers expect positive momentum on the stock to continue. The management commentary was healthy, the guidance was healthy, and the stock is looking at some good traction, which is happening in trade. After KPIT, we have the PSU banking stocks, Bank of India and Bank of Baroda. Both of these stocks, have been on the HNI radar, and in general, PSU banks are looking at some accumulation which is happening at low levels. On the back of HNI action, both Bank of India and Bank of Baroda are rising on decent volumes in trade today.
All right, thanks for that, Yatin. We'll continue to keep an eye on some of these stocks which are buzzing, especially considering we have seen so much chatter with respect to, well, should I say, buying and selling in the dealing rooms. Want to take a stock check of Axis Bank as well. Jay Bala, if we have you with us right now, I know that you have spoken about Yes Bank, but if I were to compare something like an Axis Bank or an ICICI Bank, how does trade stack up when it comes to technicals for Axis and ICICI?
Yeah, ICICI is placed slightly better than Axis, and so now if you had to have a slightly medium-term perspective, I think we should go with ICICI Bank. The probability of that going back to 52-week highs is higher than it is for Axis Bank. But there are better private banks within the banking space, and Yes Bank being one of them. I would think Axis Bank is a trading bet from an extreme short-term perspective. I think it's unlikely to drop below 520 and likely to do about 516 in a 1 to 3 day time frame.
Okay, I'm going to stay on with this theme of banking. Abhijit, if I can come to you on State Bank of India, we've seen about a 2% uptick here as well, extending gains from what we've seen over the previous couple of days. In fact, after its earnings, is there more strength left in the State Bank of India? In that case, what levels would you watch out for?
Yeah, I think I can expect State Bank to go towards 272 or maybe 275 this expiry, and if it crosses that, then it can go towards even 285. But I expect some resistance near 272, 275 as per the options data.
Okay, that's the view coming in there for State Bank of India. Well, let's also get you some closing strategies going from our technical experts. Jay, I'll come to you. Markets are now almost at day's high, I would call it. Nifty is above the mark of 10,500. Bank Nifty's crossed the 26,000 mark. And you did mention that you would buy on every dip. What would be the trading strategy for tomorrow's session now?
Yeah, you should stick to IT names and selective stocks within the oil and gas space, like Indraprastha Gas or Reliance. Use every opportunity in these names as a buying opportunity, and position yourself bullishly in these names. And as a buy today, sell tomorrow strategy. I even like Kaveri Seeds at this point of time. Although it's up almost 7% today, I think it's still got some more juice. So even from a buy today, sell tomorrow perspective, you can go along on the stock, place a 1.5% stop from current levels, and expect it to do something close to, I would say, 540 to 560 from a 1 to 3 day time frame.
Any ideas popping up on your screen right now for trade tomorrow? Abhijit, this question was for you. Any ideas popping up on your screen right now for trade tomorrow?
Yeah, I have two picks. One is HDFC, which is at 1810, which I had suggested earlier. That time it was 1800. So it is still good to buy. It can go towards 1830. And second stock is Reliance, which is at near 915. It can go towards 930 in the next few days.
Okay, so those are a couple of trading strategies. Reliance Industries, that's up almost 0.5%, and that's the buy coming in from Abhijit. Amit, considering the correction that we've seen, you've also said that you've been cutting down in terms of your portfolio. Any specific stock or sector that you're waiting for more correction to come by, where you see value in long term?
See, for trends to create, the numbers of companies are coming very good, right? So, like at least the companies that we own, the numbers are coming very good, but there is no stock price action. So there are going to be trends now. Right now, the only 2-3 trends which we can see is auto, financials, and consumer. Those are the 3 main trends where except for these spaces, the market doesn't want to reward anything. So these are normally high free cash flow businesses. They are B2C businesses. So that's where we've been putting our money. So these are not new trends. So you will not make your 3-4x here. Okay, to make a 3-4x, you will have to find newer trends. But these trends will still compound at 20, 22, 23%. For this year, it's good that we be happy with those kind of returns, 20, 22, 25, whatever that is. But those are the returns that we are targeting. So this year, with consensus, for new trends to come in, it has to show in the screen. The screen is just not ready to buy anything. They're just there's just too much selling right now to exactly understand. And to your question on like sectors that can do well, infrastructure can do well. That's one place that we have a large exposure to, and that should do well. If BJP comes to power, I'm very confident that in in the next 1 year, we should make at least 100%. Look at the numbers which are coming in. Yesterday, the numbers, most of the companies are posting somewhere between 60 to 100% growth in revenues and profits. So that's where the trend is starting. But if BJP comes to power and markets are certain that BJP is coming to power, that's where the big gains will come, and they will go up many times.
And Amit, when you talk about infra, I'm assuming that you're talking about specifically road companies that have exposure to road projects?
Absolutely, absolutely. Road is the place to be. See, this is a very risky trade. This is not for everyone, and I don't recommend this for retail investors, but this is what we are doing. So road is about 25% of our portfolio weight. This is a scenario-based thing. If we go right, I believe we'll make 1x, 1.5, 2x in the next 1-2 years in the road sector. And we, like when I say we go right, that is BJP comes to power with clear majority. If we go wrong here, we can lose 20%. So if you put 25% weight in road construction, a 20% loss will mean that you lose 5% of your portfolio. But you can make that 5% on the 75% part, like the remaining part of the portfolio, right? So that's a risk that you have on the road construction side. 20% downside risk from today, and the upside, I think it's more than 100% in the next. See, these are places where when the entire sector grows together, that's where trends are made, and that's happening in the road construction space. So that is one place where I'm very bullish, but there's a risk, of course. So.
Okay, bullish view coming in on the infra as well as the road space. Some recovery is seen for stocks like Steel Authority, NMDC. Remember, all the metal stocks were down in yesterday's session, so you're seeing some bit of respite coming in for a lot of these stocks in today's trading session. But Idea too has inched higher. That's seen gains of almost 4%. Remember, we highlighted Bharti also. Idea currently sitting with gains of almost 5%. Abhijit, considering the long-term charts for both would be looking weak, but what do you make of the 5% increase that one has seen for Idea? Is there any trade that one can take?
No, both Idea as well as Bharti are quite weak on the charts, and I mean, any rise will be just a pullback. So I wouldn't go long in them at all.
All right. Well, if you can get a chart check on Grasim Industries, that's also been weak right now. Abhijit, coming back to you, do you have a view on Grasim? It is currently declining by as much as 2.3%. What's going on here?
Grasim is okay as long as it holds today's low. So actually 990,000 is a good support. So one can buy it for the medium term with a stop loss below 990.
Okay, 990 should be the stop loss. One can look to buy at these levels, 1021 on Grasim. Amit, earnings reaction from Jet, Tata Motors, anything that you would look to buy, considering both the stocks have corrected sharply?
So in aviation, if I ever want to buy something, see, aviation globally has not created wealth. Investors should focus on sectors that have created a lot of wealth. If you see, look at S&P 500. The sectors that have created a lot of wealth are technology and financials. That is in the US market, and the same part will happen in the Indian market. 54% of US corporate profit comes from financials, and you know that's going to happen in India too. Right now, about 38% of India's profits come from financials. So slowly the financials will take more pie. Coming to a question on aviation, if I want to buy aviation, it's a very dangerous sector, because if you see globally till now, there are billions invested and no one's got return back. But there are few companies like Southwest Airlines in the US, Indigo, which have consistently, Indigo like Interglobe Aviation in India, these guys have consistently been like very efficient, and they have created a lot of wealth. So I would not buy a Jet Airways. The ratios don't favor them, especially when crude is rising. You don't buy, like Jet is a complete no. If I want to buy, I would buy the market leader here like Indigo. It's got 40% market share, and our understanding is that the market share will increase. We don't have any positions yet, but that is something that we've been looking at.
Okay, that's a view coming in on the aviation space. Avenue Supermarts is now up nearly 4.5% right now. 1419 is the level where that one is quoting. Shriram Transport is the other one which has gone up in trade. Let's just pull up these stocks. Shriram Transport is seeing gains of almost 2 to 2.5% as we speak. But just 2 minutes to go for markets to close. Let's head across to Agam Vakil to find out how exactly today's closing is panning out. And not at all bad, Agam. We're closing at day's high for both Nifty as well as Bank Nifty.
Absolutely, Navneet. Not bad at all, considering we are looking at an uptick of 1% on both the benchmark indices, the Nifty as well as the Sensex, as you can see here. In fact, you know, there were some doubts in the morning of whether or not we could have expected the Nifty to move above the mark of 10,500. That has come to be comfortably above that mark, and Sensex also advancing by as much as 1.1%, and to a large extent a lot of these gains are on account of the banks. So banking leading or rather lending strength, and up as much as 1.4%. But to take stock of what's happening in the broader markets, as you can see, well, the mid-cap 100 on the Nifty is not doing very well. So it has certainly underperformed, and that is the same when it comes to Nifty small cap as well. BSE mid-cap index also marginally in the red. So the gains in today's day of trade have been led by the large caps, and that is what we're seeing in terms of trends. We did mention banks, but another reason why we have seen tremendous strength in today's day of trade is the strength coming in heavyweights from the information technology sector. Of course, Bharti Airtel is one of the big gainers in today's day of trade, up 4%, but that's followed by TCS and Infosys, both relatively heavier weighted on the indices, up 3%. Axis Bank and HCL Technologies not too far behind, also advancing by well over 2%. On the losing end, there aren't too many stocks, as you can see. There's just Ultratech Cement, Vedanta, and Adani Ports, but all these stocks are losing less than 1%. So it's turning out to be a good day of trade indeed, essentially on the back of gains that we've seen in banks and the information technology sector in the week.
Well, a mixed day for the broader markets, but let me start off with the losers here. A couple of results reaction actually. TD Power reacted to its earnings. Remember, this is a counter where not much of stock movement has been seen, at least in the last 1 year. And look at that. It was down 15.5% towards the end, closing at day's low 157. This is a company with a market cap of 550 crore. Net cash, yet it has been underperforming for the last few quarters. Granules, the numbers came in during market hours today. The profits were down nearly 55%, coming in at about 20 crore on year-on-year basis. It's also an F&O counter, which is clearly indicating there is some bit of fresh shorts also built up for this one. The upstream companies were under pressure after the news came in that they could be asked to share the burden of higher crude oil prices. So Oil India was the one which was down nearly 7% in trade. Motherson Sumi, Jet Airways are the other counters which did close with sharp cuts. Motherson Sumi down 5% in trade today, and Jet Airways was down 6.5%. On the gaining side, the power finance companies were up and about, from the likes of PFC as well as RFC. Both of them, REC, pardon me, closing around the day's high mark of gains between 4.5 to 5%. Avenue Supermarts was up 4% in trade. 1423 is the level where it closed. And Idea, that also perked up in trade with gains of almost 5%. And results reaction from Eros Media, that was locked in upper circuit. Good set of numbers. Even on the operating front, that mall, the EBITDA for the quarter doubled, more than doubled rather. Shalimar Paints is the other one where they posted a loss, but the board also approved a rights issue of 300 crores. So that counter was also up 15 to 17% in today's session.
Right, Navneet, so I want to address what's happening on the indices. Well, let's pull up the heat map first when it comes to the index. Of course, as you can see, we have seen an advance of around 1%, Nifty gaining about 100 points. And this is largely on account of a lot of strength coming in Bharti Airtel, TCS and Infosys, followed by Axis Bank. Sun Pharma has actually caught up, and that's also advancing by as much as 2.5%.
That comes out with numbers tomorrow. I think there's some bit of action seen ahead of the numbers.
So, yes, so that's going to be in focus, and I reckon a lot of traders are taking longs right now in anticipation of the earnings. On the losing end, Tata Motors now down as much as 6.7%, so a lot of weakness seeping in, but a lot of analysts out there do have contrarian bets on Tata Motors, so wait and watch on that one. ONGC, of course, after the government action, and GAIL followed by, well, poor earnings coming through. We also have Grasim and Bajaj Auto showing some amount of weakness, but I'd say today's day of trade, at least on the indices, largely led by banks and, of course, the information technology sector.
Yeah, and some respite for the markets because we were seeing very sharp losses in the last few sessions. But let's just pull up the advanced decline since the broader markets were quite mixed in today's session. The gains were led only by Nifty and Bank Nifty. So clearly not a great and rosy picture for the broader markets as the declines were higher than the advances in today's session. 7:8 is the number. Pull up the participation, the turnover list for today, and let's see how that panned out considering today's the day for the Bank Nifty weekly options expiry. Definitely F&O turnover is on the higher side, 15 lakh crore. The NSE cash has been hovering between that mark of 27 to 32, I believe, in the last 1 or 2 months. So no major participation pickup has been seen in terms of turnover on the cash side. Let's get some closing thoughts going from our experts. Abhijit, I'll come to you. Day's high closing, if I'm not wrong, Nifty closed around its 100-day moving average. Would you take a bet if there is a flat opening in tomorrow's session? Would you create a fresh long position either on Nifty or on Bank Nifty?
Yes, Nifty is looking bullish. Like I said in the at the start of the show, it might have bottomed out, but it needs to move above 10,540 on the Nifty futures. If it moves above 10,540 in the next first half an hour tomorrow, it can go towards 10,600, 630, like a 100-point move maybe tomorrow or over the next couple of days.
All right, Abhijit, with that, we'll let you go. And thanks for giving us those views. And of course, as usual, we will have Abhijit once again joining us later on in the consequent shows. But that said, at least as far as the markets are concerned right now, we're looking at an uptick. Can we see the strength follow too? Well, it's a wait and watch.
Well, let's also get some closing thoughts going from Amit Jeswani before we thank him. Amit, what would you advise an average investor who still has a portfolio, but his or her portfolio is down considering the correction we've seen in the markets? Is it time to panic, or is it time to do some churning in the portfolio? Okay, I think there's some
time to do.
Okay, I think there's some problem with the connection with Amit Jeswani. We'll try and touch base back with him, but we'll move on. I think with that, we'll also wrap. It's a wrap on this edition of Countdown. Thanks a lot for watching the show, but don't go anywhere. We'll be back with more on the other side.